You make $100 a month in dividend income. And what you do is over time, you keep adding to your portfolio. And that $100 a month, that turns into $200, $300, $400 plus per month, because every time you invest in a dividend paying stock, you're giving yourself a raise. Welcome back to the Sweet Life Money channel, where on this channel, we talk about everything when it comes down to personal finance and building our ultimate sweet life through everyday smart personal finance. If that sounds awesome to you, make sure you subscribe for more. Today we're talking about Dividend Kings. Now, there are a couple type of dividend investments, but Dividend Kings are those stocks who have not only paid a dividend, but also increased their dividend payout over the last 50 years. That's half a century. Half a century, these guys have increased their dividend payouts. And that's ultimately what we as dividend investors want to see. So all hail the king. This is what happens when you only have daughters. It's a headband. All right, anyway, let's get down to what this is all about. Earlier in the series here on the channel, I talked about dividend aristocrats. Now, what are dividend aristocrats? They are companies that have increased their dividend payouts and have consistently paid a dividend over the last 25 years. Now, the key point of a dividend aristocrat is not only do they have to meet the standard of increasing and paying their dividends over the last 25 years, but they also have to be a member of the S&P 500. You may ask, well, what is the S&P 500? The S&P 500 is the index of the 500 largest companies listed on the stock exchange in the United States. So what could happen is a dividend aristocrat continues to increase their payout, but they fall to like spot 501 of the largest companies. Guess what that means? They're off the S&P 500 list, and they're off the Dividend Aristocrat list, even though they continue to increase their dividend. Now, Dividend Kings, on the other hand, you don't have to be a member of the S&P 500. So what could happen is you maybe fall off the list of the S&P 500, but you continue to increase your dividend. Therefore, once you hit year 50, congratulations, you are now a Dividend King. But the real question in the title of this video, should you invest in Dividend Kings, or is it a little bit risky? Currently, there are 32 companies as of early 2021. Let's go over some of them. You may be familiar with things like 3M Company, Johnson & Johnson, Coca-Cola, and yes, even Tootsie Roll makes the list of the Dividend Kings. I've also created a pie in M1 Finance, and I'll link that down below in the description so you can check out the Dividend Kings list. That particular pie holds 31 of the Dividend Kings here on M1 Finance. And you can invest in that pie if you wish to do so. But what I'll do a little bit later, I'm gonna pull that up here on the video and show you the growth potential of that particular pie. It's quite interesting. Now, one of the key points that I look at, I'm looking right now at American States Water, ticker symbol AWR. They have increased their dividend payout by 66 years. But does it mean good things? Well, we could always look at seekingalpha.com or whatever finance website you like to look at. What I would recommend you do is put the 10 steps that we go over here on this channel against some of these Dividend Kings. Now, just because they have the royal name of the Dividend King statement, does that actually mean that they're a good company to invest in for the long term? Because remember, you got to be careful about the fact that some of these Dividend Kings could, even though it's been 50 plus years, fall at any time. In fact, we saw that with a recent dividend aristocrat known as AT&T. They have announced that over the next year, they're going to be not increasing their dividend, meaning that they're falling off the dividend aristocrat list. Any one of these kings could do the same thing. Now, of course, as a CEO of any one of these companies, you want to make sure that you're not looking like the absolute fool by not maintaining such a long growth of your dividend payout. That would make you look like an absolute clown, and everybody would laugh at you as the CEO. So certainly there's a lot of pressure on these companies to continue to increase their dividends, but are their financials looking good? Remember that dividend stocks and dividend paying companies typically are taking some of their profits and paying it out to the shareholders in the form of dividends, which means that every little penny that they give out to us as shareholders, they're not reinvesting in their business. That's why a lot of times you don't see some of the big tech stocks paying out a dividend, because they're taking all that and either they have a lot of debt they got to pay off, or they're reinvesting that into future innovation. Typically, if they even have a dividend, they pay a very low percentage of a dividend yield. So 66 years, that is the record. American State Water, followed up by Dover, DOV at 65 years. You got Genuine Parts, ticker symbol JPC at 64 years, and so on it goes. Now, if you go all the way down, congratulations to these new guys. You got Black Hills Corporation, Natural Fuel Gas. You got got Universal Corporation, and you got even Target at 53 years. So your favorite store, if you're a big Target fan, drop a like down below if you like Target. They are a dividend king. They've increased their payout over the last 53 years. I think some of you are out there thinking, I didn't even know Target was around for the last 53 years. Last I remember, we have Kmart and Walmart. I didn't know Target was around for that long. Well, guess what? They were, and they've been increasing that dividend payout for the last 53 years. So not too bad. But let me pull up my M1 Finance portfolio and show you the Dividend King list. Again, the link down below in the description if you want to check it out for yourself and see how this is going. And if you want to, you can invest your money into that pie. So right here on my iPad, you can see this is the Dividend King pie that I created. By the way, there's not actually a Dividend King ETF. There is an ETF that tracks dividend aristocrats, but when it comes down to kings, I don't believe there's any ETFs out there. So this could be a good way to capture it if you want to do that. Totally up to you. But I think this is a key point to look at. Amongst all the 31 stocks that I have listed in the Dividend King pie, if you go over here to the 5-year chart, look at that. That's an 80% increase. And if you return it based on an initial deposit of $100 way back here in 2016, you're now sitting at over $172. And that assumes that you never invested any more money. You just basically put in $100 and let it grow over time over the last 5 years. But let's even look at the last 1 year where it's up 29%. Let's look at the last week, up 0.5%. Last month, up 0.53%, and after the last quarter, up 9.48%. These are your stable companies. These are not the hype stocks. These are not the ones that you're going all in on trying to 10x your money. But I don't know. Maybe you are, because I don't know about you, but 5 years comes and goes so quickly. I mean, think back to 5 years. That felt like yesterday, right? Well, yesterday, you were up 80%. You see what I'm saying? So this could be an opportunity if you do the research and make sure that you're doing the right thing, that you could actually get a nice stable income coming in from the Dividend Kings. If you look down here, you got a dividend yield of 2.3% on these 31 holdings. And then of course, here's all the Dividend Kings going on right down here. But I want to talk about retirement. If you want to retire early, and yes, I'm saying way before the age of 65 or 70, I'm talking like, depending on how old you are now, retire in the next 10, 20 years. And if you're only 20 years old, you start right now and you start smartly, you could retire at a much earlier age than some people that go around their life trapped up in the hamster wheel. And I think these type of strategies are an interesting way to do that. Again, you got to do your own research to make sure it's right for your financial situation. But let's take a dividend yield look here. 2.326%. How do you calculate what you need to retire? A couple things you could do. The very first thing I do, and this is very similar to the financial independence movement, FIRE, financial independence, retire early, in the form of dividends. What you want to figure out first is how much money do you expect to spend every single month? Is it $1,000, $4,000, $10,000, $20,000? What is it? Let's say it's $4,000. So you know, in order to retire, you need at least $4,000 a month for the rest of your life. So you take 4,000 times 12, that gives you $48,000 a year in expense that you need to cover if you're going to retire and no longer work. Then what you do is you take that annual amount, in this case $48,000, representing $4,000 a month, and divide it by the dividend yield percentage. So if we take that and we turn it into a decimal point, we would divide 48,000 by 0.02326. That represents 2.326%. That means you would need a total value of $2.06 million in the Dividend King specifically in order to generate that. Now, I don't recommend putting all your eggs into the Dividend King's pie, but that gives you an example of if I want to make enough money just purely on dividends, not on growth, I would need to build up a $2.036 million portfolio in order to generate $48,000 a year in dividend income. Now, of course, if you diversify, that yield could go up higher or even down lower, but it gives you a range of control based on what you're looking for. Now you might be like, well, that's ridiculous. $2 million. Where am I going to bloody find? I got to be a millionaire. And you're asking me to find a way to make $2 million. And that is, this video sucks. I get it. But here's one thing that you got to keep in mind. You're missing out on compound growth. That's one piece that a lot of people don't understand when it comes down to building that $2 million or $1 million portfolio, is that over time it compounds. How you can figure that out is my dividend growth video, which I'll link up above and down below in the description as well. So you can see how the power and the magic of compound interest can benefit you toward what could be just an initial $100 investment, building your way up to millions. But I have a challenge for you guys out in the community. In my 10 smart steps, I have not looked at all of these Dividend Kings yet. Some of them I have, not all of them. Are there any Dividend Kings that do not pass the 10 smart step rule? Are there any that have too many red lights in them? If you've watched the video on how to analyze a stock, you'll know exactly what I'm talking about. If you find one, comment down below and let me know. But until next time, here's some other videos that might help you on your personal finance journey, and we'll see you on the next video.